Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York on Wednesday, April 13th, 2016, and this is the Daily Report for Gold and Silver. We do have some strong downside pressure in gold this morning. Silver trading nominally higher on the day. We'll first take a look at gold. Gold trading roughly at 1244.30. This, of course, is COMEX that we're looking at. Low on the day, 1241.40, and the high, 1258.70. Now, roughly the same move, but less of a drawdown, down about $12 in spot gold right now, trading at 1241 and change. The low, 39.80. And the high on the day is 56.75. We have stops below 1240. I'm going to talk to you about placement of those stops on today's show because these stops should be loose, and I want to really distinguish between when I write just below or below in terms of the range that you should look for your stop to be at. We'll look at that. We'll look at silver. We'll talk about where we think gold will find support. We'll do that all on today's report. Traders, there's no doubt we're seeing a little bit more pressure than I thought we might see in gold today. As I said, it's trading down to about 1244, low 1241.40 on COMEX, and in spot the low has been 1239.80. Our stops are below 1240, and let me show you what prompted the particular area for the stop, and also my recommendation about how loose to have this stop. Typically, when I write my stop, I'm saying below or just below. Just below, when I'm looking at the market in that way, when I'm saying just below, I really am looking at $1 to $2 below. So if a stop is just below, call it 1240, which is where our current stop is, then I might recommend putting it at 38 or 39. When I say below, I want a little bit of flexibility. And the reason for that is I am looking at the low on this particular candle, and that is where we actually came out and really derive the number of looking at that as a potential level of support. And we're really close to it right now. Of course, we're in at 1240, so we're not looking at risking equity. We're looking at risking profits because obviously had we gotten out at about 1262, we would have pulled $20 on the trade, and that wasn't to be the case. Now, the way that I'm looking at this market is we are seeing more than we'll typically see in a upside market that's moving up that simply consolidates. And you're getting that here. This is the beginning of February. Market is moving up, of course, and you get a period of consolidation, these two dojis, and you also get this red candle. And as you can see, it is looking like it could be a potential top, but then the market scatters and then actually moves up and hits these tops here at around 1250, 1260 in that area. And so when we look at that particular area where we got that consolidation, meaning right in here, that looks different than what we're seeing right now because we've had an extended consolidation. We've actually seen lower pricing, and we've seen lower pricing by about $20. So we have some real support, I believe, in this area, these series of tops right in here in terms of our historical reference. But I want to make sure that our stop is not so tight that, in fact, if the market goes into this area by just a little bit, breaches it by just a little bit, that it actually stops us out. So when I say below on this particular instance, my recommendation is 35 or 36, but keep it definitely a little bit looser so that if, in fact, the market goes into this area and finds support and bounces back off, we are not stopped out. And so that is my suggestion on this particular trade. And so traders, lastly, I do want to look at our daily chart today. This is a chart that has our master Elliott wave count. I am still under the belief that we have completed this dynamic corrective wave 2. That is still my sentiment in the market, even with the market selling off in the way that it has today. This long spike up, our 38% retracement, and I believe now our wave 3. At the same time, we have a caveat, and the caveat is we can certainly identify this Three River Evening Star, which is really capped by a doji, and this would have been, of course, yesterday's activity. Although it closed slightly higher on the day, the open and close were fairly identical. We can also see I've got a 28-day moving average, and the lows just touched into that area, but we really didn't break through, and we closed well off of the lows on this particular candle that we're looking at. So for the time being, we are going to maintain our current long position. We are going to maintain our current stop below 1240. But as I said, you want to make sure that that stop is on the loose side, 35, 36 in that area. You certainly don't want to have this stop at 39. Even 38, I'd be a little reluctant, considering the low being 39.80 on the day. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.